Hello everybody, welcome back to Lion Bull Academy. Today we continue as basic course and we're gonna start learning how to reading a candlestick, what they are and why it's very important in trading and investing. In the beginning, gonna look for you a little bit complicated, but don't worry, we're gonna explain step by step with real examples and you will understand perfectly what is and how to use it. So let's start from the beginning. Reading a chart. First of all, what is a chart? Chart is just a visual representation of the movement of the price of a stock, in this example, in a determinate period of time. That's what is one chart. Yet, instead of see everything in numbers, they will be very complicated to reading. You make a visual way that you can understand where is moving the market just by looking it without need to concentrate too much in the number of the price. So let's start how it looks one chart. So the more used chart exists many different type of charts, but the more used is with candlesticks. The candlesticks they are calling like that because this chart here, like you can see, looks like candles and was invented in Japan in the first century of was invented for one person who want to study the market of selling rice but don't want to use number, want to use one easy way and more representative way to study the movement of the price of rice. And like this coming outside this chart. Okay, we just concentrate now in the important part. What show us here this chart, I will explain now everything, so don't worry. What show us here this chart is what do it the price, where is moving, how much cost in a determinate period of time. I'm going to show all the past movement and the actual price of the stock in this situation. So let's understand first and all how is formed one candle. Like, did you understand better? So this is the candles. We can find them green, red, or in some case you can find in other graphicators white and black. Really is not important too much. Just I'm going to explain you now what this means. So the green candles represent a bullish candles. It means a candles with the price is going up. And a red candle represent the bearish candle. Is where the price is going down. So how you know when the price go up or down? We can see here it's a lot of candles green also in the price going down, yeah? Let's continue explain. So for become one green candle, we just need to have an open price. It means that in a determinate period of time, like just now, we say that in this moment, the price, the market open and start moving the price. The first position of the price is as open position. Then, when close the price, because each candle have a determinate period of time. Example, let's make an example that this candle is 5-minute time. It means one candle here in the chart represent 5 minutes of time of movement of that stock. Let's say we open at price 1 and then we close at price 2. Because the open is more down than the close price, that's become a green candle. Because the close price is higher than the open price. Then this is a bull candle that show us that in 5 minutes the price is going up. That's exactly how is the candle. Here also in the candle can happen this high, like you can see here, like this small flame that you have here up and down, the tail, how we calling them. This represent then between the open and the close, between that time, that is the 5 minutes at the moment, that we are steady 5-minute candle, the price was going more higher, but at the close time was below that price. It means we open here, just follow my mouse cursor. We open here. The price going up and pass 1 minute, 2 minutes, 3 minutes, 4 minutes, and go up. Then before the 5 minutes, he go down a little bit the price again, and then close here. Then this candle show us that the price was go till the price 4, but closed at 3. This is how it's working. That's why he showed that tail that say, looks, in this 5 minutes the price will go even higher, but after close in this position here. That's also calling noise. This movement here, these tails are also noise. It's price that it's important because show us the power of the market, but we can don't make too much attention. Depends on which time frame we are looking. After, in the next video, I will explain about how to find pattern in these candles. But for now, we just need to learn how to read them. Okay, how to form now a bearish candle, a down candle. It's like that. The price open, but when close is below the open price, then become a red candle, a bearish candle. If the price, example, like in exactly this example, when open, you see he have this high, this above that open position here, this tail. It means that in one time when the price was moving, the candle here was green, but after start going down and close below the open price. So the candles, when they are still open, they don't close their price, they don't pass this 5 minutes and go to the next candle, they still can change colors. So you need to follow them for understand if that candle is gonna change color or no. So it's very important to always, when you want to make operation in trading, to waiting that the candle close. Like this, you know for sure that after don't gonna change direction in the open movement. In white and black is exactly the same. When the price open and then close above the open price, it's a white candle, it's a bullish candle. When the price open and after close, the close is below the open, is a black candle, that is a bearish candle. And the highs and the lows is that in that period of time, in this situation, 5 minutes that we are talking, the price was moving in that places. This means was cost higher than the open or was cost lower than the open, okay, and lower than the close. Okay. Now here we can see the candles, how it's working. Let's look in example here. The price was open. Oh, let's make one complete example. Okay, better. In a live market movement, let's put in 5 minutes. What this mean 5 minutes, 1 minute, 10 minutes, 15 minutes, 30 minutes? This is mean that each candle have a value of time. Now we are in a chart of 5 minutes. It means that each candle represents 5 minutes of movement of the price. Like you can see here, the candle is moving. So let's take an example, this candle who is moving now. The candle opened here. Was one time in this 5 minutes that go down here. That was red in that situation at the moment. But then start again going up. And the candle, you see, like here, was going more higher and then come a little bit down, then again up. This is mean that in this 5 minutes the price is bullish. Now we understand that here the price is going up, is higher than the price when start this candle. That's a bullish candle. We always try to find a big amount of candles for show us the trend for we understand where is going the market in that period of time. Let's now look in all these candles here. You can see here you have a lot of candles who going up and also a lot of candles who going down. This red one down and this green up, yeah, in between also somewhere. But the general tendency, the main tendency, where is moving the market is up. How you know that one? Because the lows of this movement are always higher than the lows of the next movement, like you can see here. This is the lows, the more down of the charts, of the candles. Then this say us that the tendency, the real tendency is up. Because each movement of the price have a uptrend and downtrend. Is moving by impulse and correction, impulse and correction, impulse and correction. Like this is how moving a price. That's why we always try to find the better enter for trading. So next, how we know when the tendency is down? So it's the opposite. When the lowers are more low and the highest are more low also. It's exactly the opposite than here. When you see that the lowers are more high and the highest are always more high than the previous high. Let's now continue with that examples. Here, let's forget for a moment about the candle and just looking lines. You see, this is the movement of price only of close, the close price. We don't care about where open is, only when already close the price each minute. Here you can see the price going up and make one maximum, one high. Then the price go down and make one minimum, one low. The next make one more high and is higher than the next higher, than the before higher, than the previous high, sorry. The higher is higher than the previous higher. And the minimum, the low, is higher than the next higher. And like this continue. That show us that it's an uptrend. When the price, the maximums are always lower than the previous maximum, show us a downtrend because also the minimums are down than the previous minimums. That show us a downtrend. And this other one tendency more, because we have three tendencies in the market, is up, down, or lateral. What is lateral? That the price maximum and minimum stay in one position, in the same position. Like we can say here. You see, go. The maximum is almost in the same place and the minimums are almost in the same place. That's one lateral is called. We can show here better. High, low, high more higher than the previous high, low more higher than the previous low, and like this, up tendency. Low, high, low, lower than the previous low, and high, lower than the previous high. That show us a down tendency. Lateral, highers are similar and lowers are similar to the lowers and higher similar to the higher. Lateral tendency. The widgets are in a range market. How we can find out this movement easy way? Let's do like that. We now want to understand as movement of the market. So we create one line and we exactly choose the lowers, we put them together and we just now create one tendency line. This tendency line, more time the price touching this line that we just now create by, you see 1, 2, 3, 4 times touching, 4, 5 times touching, it shows us that the tendency is higher and also have a lot of power. So till this price don't broke below this tendency that we just create here, that we just show, we consider it that the market is always up. So all these down zones here are good opportunities to buy the market. And also, if we drawing the highest, more high every time, like let's say, or let's do it like that. Let's make the actual movement of the market. Look, here you can see the price touching first time here, second time here, third time here, and almost fourth time here. So we just now create also one channel. The channel, what is that? We suppose, normally how working in analysis technique, that when the price will be again in this zone, after will make a new impulse and go to that new line we drawing here and make then here one correction down here and like this. I will draw it for you can understand right. So will be like that. Let's make an example. From here, the price I cannot draw it. Okay, let's make one line. The price go down, go down, go down, go down. Then here will touch after we calling this pullback. Then we continue go up, 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 up. This is one impulse. Then down, 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 down. Again here up, 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 up. So till the price don't broke one of these lines, we are considered in analysis technique that the price will continue moving like that. Now can happen that the price arrive here that the price moving arrive here and instead of make a new impulse broke it and then can start make it a new tendency and this time can start going down the tendency or can become one lateral tendency. But when he broke, we start looking for possibilities of a new tendency. What we need for a new tendency? Find or new lows and new highs for understanding if the tendency will be up or down. That's how it's working the analysis technique, the basic way. We create these trend lines for encapsulate the price and understand his movement. And when the price broke that movements, we looking for a new possible tendency and trading. Because the important is to trade the tendency. The very good tendency to trade is uptrend and downtrend. The lateral trends are more difficult because you never know when gonna broke. In future videos, I'm gonna show you exactly how to catch this movement. But now we are just studying how it's moving the market. So your work to do now is just drawing this line of tendency in any chart you are able to see. Now I'm gonna show you how to open a chart in Etoro. Like this, you can start practicing these lines, and we're gonna make some lines again together. So let's after you down below you have the link, you subscribe to Etoro, you put all your documentation that I was make in the first video how to subscribe to Etoro to register. Now you have already your account, and the first step you're gonna see gonna be your watch list. In your watch list you're gonna have already some instruments, some stocks, some crypto, always gonna be there something. You can change which one you wanted, but let's an example. For this example, I'm gonna choose oil. I click in the oil, then coming this next page. I go in the number 3 where it's writing chart or a graphic, depends on your language. You click in chart and will appears here your chart. You see here in the right side these two arrows, you click on them and now you have complete your chart ready for start study the market. Let's start now together understand this market. For the moment we we check which time frame we are looking. It means how much time is each candle. If doesn't matter what we have it, we choose the 5-minute candle. It means now each candle represents 5 minutes of the movement of the price of oil. Let's find out now the main tendency of this chart. So we click here, go to line, click in line, and try to put together this first one. So we click here, and now we see here some movement here. Perfect. We will see here a connection in the highers are always lowers, like you can see till here. That's what show us that here was a down tendency. We can also draw in one line more in the lowers, more lowers. Like example here already, we was able to make one here, but then you can see that here we have one more that is not connected. We can make one line more here to here. Then you can see here is one more trend line that looks more similar to the uptrend line. Okay, the price was going exactly in range. How we will see was go perfectly inside of us a channel here. Go down, then make one. When we are in down tendency, this is called an impulse because we are in an impulse in the downtrend, and this is called pullback. When we are in an uptrend, then the impulse is up and the pullback is down. So it's just the opposite. So here we have one impulse down, then one pullback, impulse down, pullback, impulse down, then pullback, one possible broke of the tendency, then coming back down, we still are okay, still the downtrend, but here broke again. Here show us a little bit of broke, what we can see here, but then come back up. So this movement here show us very stronger that we already broke us down tendency. So what we can do it now next is take again as line and drawing this lower, and here we can see now here was always lower, more lower, but here the lower become higher and also close of the top of the tendency line and even cross the tendency line. So we make here one line more and show us as possible new uptrend. But here at the moment, I drawing one horizontal line just for you see. At the moment, we see that the higher, the last higher, still is higher than the new movement of the price. So we at the moment don't know where gonna go the price. When we gonna know where is the going the price? In this situation, I will drawing now for you. When this price broke above this one and make a new high and then start going down, and then make a new low but higher than the previous low, that can be even here, and then continue and make a new high, then now here we understand that is a new uptrend. When is the better moments for we start thinking about a strategy we want to enter? In these moments here, when coming closer to the trend line and create for us an opportunity to buy in the more low of the highest trend line. So like this is how you see the movement of the market. Yes, little bit confused, but it's how it's working. When you already start have a new movement, you can take this trend line and we don't need more. This we still keep it because we don't know if now this movement can happen, the start here can come in also till this trend line and then moving up. But for become an uptrend, need to break the previous higher. And now as previous higher is still higher than the new one now here. So we are actually in a downtrend that looks like they want to become again an uptrend or at lateral trend. If now the price arrive here and stopping in this line exactly, and then coming here and stopping around these lowers, and then up here and stopping in this line, we are again in lateral. In lateral, we don't trade. We wait in the brokes of one of the two directions for start a new trend, and then we are trading the market. So, like this is how you're reading a chart. What you need to do it now is practicing. Just look in this chart, start to understand when open, when to close, look in the movement of the chart. You can put in 1 minute because in 1 minute you see every minute you have a new candle that you can study how it's moved. The best ways to see the real movement of this instrument, in this case oil, is always looking in 1 day chart. What mean 1 day chart? It means that each candle represents 1 day of movement. The beginning of the day is the open price and the end of the day is the close price. Like this you can have a more big view of where is really moving the price. Like now, because of this situation and all the world of OPEC in all war price that they have with the Russian and the American, put the price very down. You have some up candles, but the highs are always lower than the new highs, and the lowers are always new than the new lowers. Only here we see a reversal in the price. Let's show you this reversal in price. Here we click this line. We make a trend line approximately. Here you can see here the price was touched. Here the first one that we were drawing, then here touch again, then here stay quiet, then here touch again, but here broke it very stronger and continued his movement. So you can see he was make here one high, then the price pull back a little bit, but then make a new high. In this, then the price pull back a little bit, then he go again make a new high, and then pull back a little bit. And you can see here that also the lowers are always higher than the next lowers. So this show us an uptrend. And if we take also here and drawing a line, let's make from here, we can show here that was able to broke there, but we can make a new here. Why? Here broke this trend line, okay? Let's say. But if we drawing from here to here is broke a little bit more down. But if he make a new low, but then pull back. You see here this movement, the candle was going down, but then start going again up. Don't here in this, just at the moment, just in this candle of today, show us that the trend still up from here, or if we want even can take this one and moving to here. So at the moment we can see that can be still an uptrend. Why we moving this trend line? Because still don't make a new high low. If example now the price start going up and here stop and then start going down, then the new high is become lower. There we start looking for possibilities of downtrend or a lateral trend. So now your work. Take all this chart that you like it. Start drawing trend lines everywhere. Start looking how react the market. Putting 1 minute chart. Drawing this line. Look how they broke. How they create new trend lines. How they create uptrends, downtrends, laterals. Become normal for you see these movements And in the next episode of this collection of videos, I will show you about patterns that can explain you where gonna move in next. And then we're gonna start with strategies, with indicators for find out the movement of the price. And after that, we're gonna start with fundamental analysis. It means study the news, study the companies, how they are going. Then when you put all this information together, you're gonna be able to predict with an average of success of around 60, 70, 18%. It means by mathematics you have more probabilities to get right the position if you study the market than just enter random without just, oh, now it's down, let's buy. No, you need to understand why it's down. If it's really downtrend, looking charts with more high time frame from 1 day, 1 month, 30 minutes, and understand the whole picture of the market movement, compare with the fundamental analysis, and then you're gonna understand, yes, look, it's a lot of information, but when you have already this base, then you just need to follow one strategy, look some indicators, and you already can understand the movement of the market. And with the time, you will see that it's not difficult. I mean, it is easy to study the market, but it is also hard to study the market. You need to spend a lot of time there. It is easy, but hard in the same time. You need to have a lot of knowledge, and you need to always study chart and fundamental news of the market. You can see now the candle, how it's moving. So that was everything for today. If you like the video, just please click the like button. Comment down below if you have some question or if you want more specific info about the candlesticks. And subscribe to the channel. See you next time.